Foreign investors can now gain Hong Kong residency by purchasing residential property over $50 million as part of the new Capital Investment Entrant Scheme expansion. To expound on this, we have Antonio Wu from Knight Frank and Thomas Check from Colliers Hong Kong. Antonio, starting with you, what possible changes will this policy bring to Hong Kong?
There are many positive impacts. The Capital Investment Entrant Scheme now allows you to acquire a 50 million worth of residential property in order to get a residency of Hong Kong. Since the government announced the policy in March this year, we have seen a total number of 600 applications have been processed, reflecting that Hong Kong remains a stable and reliable and attractive place for many investors. I also believe this new scheme will attract a lot of high net worth individuals, including those businessmen from mainland who want to migrate to Hong Kong. And they will be having the opportunity of investing into the Hong Kong real estate market, which means the demand for high-end residential and luxury housing will increase. It also goes to say Hong Kong's aim to solidify its position to be the leading global financial center. This move will drive a wide range of high net worth individuals or businessmen to come to Hong Kong, enhancing the city's financial and economic landscape.
Well, this policy will really shake things up in Hong Kong, especially in the asset management sector. With more M&A activities and better liquidity in the overall capital markets, we'll be seeing growing opportunities for professionals like bankers, accountants, lawyers, like surveyors like ourselves. It should attract more talents into Hong Kong for the long run and make the city more appealing for global players to set up their office here and expand their office here, driving demand for office space, retail space, and even accommodation.
How effective will including residential properties in the scheme be in attracting global capital and single-family offices to Hong Kong?
The new schemes actually allows people to invest into property. I think buying property is no longer a pathway of applying residency for many countries. This certainly has given a very good opportunity for businessmen or high net worth individuals who wish to migrate to Hong Kong. I think not only the demand for high-end residential, and I think the demand for office space also, because when these families or when these high net worth individuals, they move to Hong Kong, they settle down here, naturally they will open up their family office here to manage or to overseas investments here in Hong Kong in and out of this place. So I think this is a very positive move for those investors or new immigrants who are interested to moving their assets into Hong Kong.
Well, definitely it will help. Including high-end residential properties is a good move. Investors and fund managers, especially high net worth families and wealthy individuals, they like having luxury residential in their portfolio, especially in global gateway cities like Hong Kong. So places like the Peak, Jardines Lookout, the South Side would actually be benefiting. And these properties are not just for pure investment. Most of them, see this as a symbol of wealth and also status.
So if you were to make recommendations, what other investments should Hong Kong include in the scheme to boost more capital?
Yeah, I think Hong Kong should follow other countries. A lot of incentives or supports has been given to the new immigrants who wish to develop their businesses in the high-tech space. I think Hong Kong can do that too. We have this technology and innovation funds if we can increase the investments into these funds to support more new startups or incubate the tech companies who are developing in technology or AI, in Hong Kong. Certainly, I think we can develop as one of the leading cities in the technology space. And also later on, these companies, they can make use of our IPO platform to go for public listings as well.
Well, I think the scheme actually covers a lot already. So apart from the traditional financial products, we also include the luxury residential, commercial properties, industrial properties, retail properties. So at the moment, it's already quite comprehensive. But I think in the long run, if adding additional products like development sites, this would help boost the land sales market, and even in the long run, increase the government revenue from land sales. And if we want to really spice things up more, increasing the cap from $10 million on the real estate investment to something higher, probably like $30 million. This will help speed things up and bring in more capital in the short run.
Thank you so much for sharing your insights, Antonio and Thomas.
Thank you very much.
Once again, those were Antonio Wu, Head of Capital Markets for Greater China at Knight Frank, and Thomas Chak, Head of Capital Markets and Investment Services at Colliers, Hong Kong. For more news, visit hongkongbusiness.hk.